Alright, good afternoon and welcome to the end of the recording for today. And today is a Friday, March 8, 2024. And this week we have a full 5 trading day. What a week we have. It's amazing, a lot of action, right? A lot of move. The market gives us all opportunity to make easy money, easy trade. So just come up for this week, we have the Fed chairman Jerome Powell, and he testified before Congress, U.S. Congress on Wednesday and Tuesday, and it makes lots of fireworks right there. So basically, the idea that they're gonna cut rate, but later on in 2024, so it could be in September, like we anticipate. September, right? That's where they have right here, around this time. But anyway, we are in week 10 of 2024, and next week on week 11. Just pay attention. Two more weeks we will actually from this week. 3 more weeks we will finish the first quarter, right? 13 week in March. So 2 more weeks, right here we're gonna finish the first quarter, and that's reason why next week it's gonna be huge. Lots of activities. So we're gonna expect a huge volatilities in the markets. Basically, the market gonna go very volatile right there. So the price action will be very volatile, which is bring opportunity, right? So don't be scared. Whenever we see the increase in volatility, that means the engineer move is made. So we just follow, and we will have endless opportunity right there. Yeah, the CBR is gonna be next Tuesday right there. That's huge. And also the FOMC meeting in March right there. Alright, go back to the charts. Like we say, we really watch for Friday, see how the market set up, and we see that the market sell off today. So that means that this is the first sell up for a long time. Normally we see the Friday it's gonna be, let's see when the first time. Let's pull out the daily profile. We see. So it's the Friday, or it's the first Friday. I think we let's count which one is Friday. We have a code. We have a script that mark the day of the week. What day? Let we see. Day. Oh, we'll check out later. Basically, we want to see what the day, right, of the week, right there. We have a code, but anyway, we'll do later. So right here we had the first, I think we have first Friday close for a long time. Okay, let's see what is this one. Okay, let's check with the last. So right here, let's look at the calendar. So today the 8th, right? Today the 8th. Then look at the first right here. the first? Where is the first? Right here. Mark the first. It's up close. It's a Friday. See that? That's it, the Friday. And then we just give us the second. We're gonna pull out a script and it will show all the Fridays. That's easy. Alright, so we find our script right here that tell us it is the Friday. So we identify all the day, which is Friday. So this is the first Friday, is that right? Not really. The day before the February 24 is also down close. However, it's down close above the high of Thursday. You see that? This is up close, but today it's closed down before Thursday. Right here is also down close, but is still above the Thursday high. Up close, you see up close, up close, up close right there. Up close, wow, one. Up close the 3 weeks in a row. Oh, not really. Right here is down close. Right here, 1, 2, 3, 4. So 4 weeks in a row. Right here from January 19 into February, we have up close on Friday. And you look at this Friday and we see that the reversal happened on Wednesday, and then Thursday continue, and then Friday is a pullback. Similar to here, we have reversal on Tuesday. So watch for the reversals happen on Tuesday, and then the Wednesday. Then we have Thursday, and then Friday is a pullback right there. Last week there's no pullback, it continued to rally, but this week it pullback. Okay, it gives us some idea right there. We just want to see when is Friday we can short them and when we could go long. So far there's no pattern right now. Yeah, we try to find a pattern where on Friday it's gonna pull back from the Thursday. Let's see. So far with you, the day time frame, it's hard to say, right? We look at the time frame again. On the daily time frame, it's hard to say which one is gonna be, which Friday is gonna be up close, which Friday is gonna be a down close. It's kind of random right there. But anyway, let's look at the 5-minute chart to see. Yeah, right here. So right here we have the 5-minute chart right here. Right, 5-minute chart. Here's the Monday, the Q1, and then we have the Tuesday, which is reverse. We have a huge open gap right here, huge open gap on Wednesday, and then we have the huge open gap on Thursday, and Friday is a pullback day, and you see that it's still not fill all the gap, it just fill half the gap right there. So now we see, whenever we see the gap up on, a real open gap, then it can give us the idea that the Friday gonna be pulled back and fill out the gap on Thursday. How about that idea? How about that's for a pattern? Let's take a note right there. So basically right here, so today is Friday, right? Today is Friday and no open gap. That means we can go short on Q. Is that Q3? Let's take a look. Is that on Q3? Yeah, this one we don't use the Q for this one, but we use the Q for other charts, the chart that include right here. So we can go short on Q4 in the AM session right there. Q4. Q4 AM. So it's around 10-ish or 10:30-ish. That's an idea. And the targets for the target gonna be the open gap left unfilled from Thursday. So that's an idea right there. So that's the note we take right there. Okay, now let's look again. Go to the charts that where we don't include extended trading hours, so we can see. Okay, right now let's look for, what is this one? How about we add more in here? We want add time frame. We want intraday, and we want, how about 20-day, and we want 5 minutes. Okay, add them, and we're gonna move them up. All right, move them up more. Apply and save it. Now we go to wow. All right, so a little bit hard to say. We want to find out, how about right here? What happened last week? Oh wow, I think we find a pattern. You see, last week we have a gap up on Thursday, a big open gap. That's what we need. Right here, the gap, we need to fix the code right here. It says today it's a gap up, but you know what? It gap up, but we don't care the gap. We care the open gap. You see, you see the difference? So today, even though the alert say it's gap up, right, but it's not accurate, because it's measured from the Dow close candle from the prior day and the up close candle, the open candle at 9:30 today. However, that's not what we're looking for. We're really looking for the open gap. It's really open right there. It's an open gap right there. So we have to fix the code right here. Basically, we're gonna measure the high, whether it's up close or down close, the high of the last candle and the open, let's say that the open of the open of today, you know, candle right there at 9:30 start up. What we try to say, we fix that code, we put no, we fix that code, fix the code to get the open gap. That's what we call open. It need have to be open. You see, empty. Some people call void right there. They call volume void, something like that. Yeah, that's very critical. Open gap. Not gap between open and okay, don't call this open because we're very confused with the open and close. That's called void, a void gap right there. Yeah, don't call open because it's very void gap, or a void gap right there. Okay, if we say open, it will confuse with the open and close of the candle, so that's called a void gap. Right here we say a void gap. Today void gap. I'm gonna fix that code. But here you see the pattern. Wow, look at that. It's just the difference it makes. So Thursday. Oh, you see that? For this Thursday, it gap but never fill. But you look at Friday, it also have a void gap. See that? The void gap and the void gap on Thursday, and then definitely around, we can short them at around 10:30 is right there. See that? The beautiful short setup right there. However, it retraces, it not keep falling down like today. So, but that gives us a good run right here, right there. We just trail ourselves out. See that? So the three pattern we see right here. Thursday, void gap up, called void gap up, yeah, void gap up. A void gap up, never refill. Similar void gap up on Friday. Then wait, we can short them around 10 or 10:30 right there. You see that? 10:30. Short them right there. Perfect short them. And then another pattern right here. Right here, we see a void gap up on Thursday. However, it came down and it filled the gap right away on Thursday. And around 11:40, it reversed. It go back. And when we go to Friday, because the gap only fills, it keep rolling. You see that? Rolling right there. And remember, on Friday there's no gap, even though you see the open and close right here, the gap, but actually there's no gap. You see the high right there, there's no gap. So there's no gap on Friday, and it pulled back right here around this breakout level right here, we can see, and then it's keep rolling on Friday. And for this week, so like we see the same pattern right there. It gap up on Thursday, and on Friday there's no gap up, no void gap up. There's void gap up, and then no void gap up. Then we confidently, the same like the other day, right? We confidently we can short around there. So basically, if today Friday and no void gap up and the void gap up, yeah. So basically, can we abbreviate right here? Void gap up. Some people they call volume imbalance, right? I think that is called volume imbalance. VOB right there. But that's we say VG, void gap up, void gap, void, yeah, that's it, void gap. Void gap up from Thursday, left unfilled, 11 unfilled. That's the condition to short right there. See that? So if we see this condition, then we can go short. So Friday short setup. Yep, so there's 3 items that help out right there. First, there's no void gap up. Today. And then the void gap up from Thursday is left unfilled. Right? When they open it's still unfilled. So we can anticipate we short on Q4 in the AM section, which is around 10ish or 10:30ish, depend on the location, right? Depend on the location, yeah, and on the price action. So we have to combine both factor in here, the time and the price. So that's an idea. And then our target is just the gap left and Thursday. A beautiful setup right there. This is condition, okay? However, if the gap is filled on Thursday already, so we anticipate that Friday is gonna go up, so don't short them. So that's an idea. Why we need to short on Friday? You see that? That's the beautiful observation right there. Let's keep that note and we continue to redefine our setup, make it more reliable, you know, higher properly right there. So remember, trading is about craftsmanship. The more we practice, the more we getting better. That's an idea. Just be better. Try to be better at craftsmanship. Don't worry about the money. The money will be there. Just follow the process, observe the process. So we see that on Thursday, the huge gap, the huge void gap up, and it did not have an opportunity, did not have a chance to refill them. So left unfilled right there. So today the whole move right here, you see the giant move right here, It's just a manipulation right there. It create a 4 breakout right there, but we did catch the move. We did catch that move. So the trade, I think we did do the trade right here. We go long. Yeah, today it worked. Today showed the trade for it. Already, you know what? We will get into it later, but that. So yeah, that's the pattern. You know, we try to see. How do we trade the Friday? That's especially the Friday before a very high impact new release coming in the following week, and we can see the pattern right there. So this Friday it filled the gap. So let's see how it play out. Monday, if it continue to fill the gap and break down, fill this gap, or it's gonna be continue to rally. Let's see. We just don't try to get too much into prediction, right? Because we try to prediction, we try to be right, and we don't want to try to be right. We just follow the markets. Follow the trend, follow whatever market tell us. Okay, for today at 8:30 we have the non-farm payroll data release, and it's up huge a swing right there. It's up close, candle, but it's a huge swing. Let's see how big is this swing. It's about $3, well, roughly $3 right there. More than $3. That's a huge swing. We did mark, as soon as we see that, we mark the high and the low of this, because we know that's the key level. But look at that, it break out that level above a little bit, it carry a 4 breakout, and then it sell off, and when it break out level, it go up, and then it go down. It's close below that level. Alright, so when we go in here, we I mean in the real time, let's open the. Here's what we are going at that moment. So we go in at this 9:30 candle. We strict that level, right? We saw that level on. We draw that level and we treat as a 4 breakdown, right? There's a 4 breakdown right there. You're gonna break down, but it's 4 breakdown because we follow the market. The market tower right now is bullish, so this level gonna be 4 breakout, breakdown. Whoever short here gonna get stop out. The idea right there. So we're going right here. We put our sell stop at this level at 5:15.89 right there. Yeah, we enter at 9:30. And this candle, and as soon as this candle form, we move our stop loss up here, and we get stop out at this candle. I think we moved to break even right here. Actually, we moved to break even. And then we re-enter at this candle because we see that this is just a retest. So we re-enter right here at the open of this candle, and we have a good trade. So we have just a long, but that we re-enter them. The first, when we stop out at break even. So right here. But now we look back in the hand side, we see that the better entry for us is going to be here on small time frame right here. Here if you entry on the level of the high time frame, it will level. But if we look at the low time frame, in this case 5 minutes, then we have it level, so we can put the buy stop right there, and our risk gonna be much lower. You see that 31 cents. But if we use this level, it's gonna be huge, about 54. So we're going right here at the level, then we try our stop loss and we get kicked out at that level. We spoke, if we learn our mistake right there. That's the first mistake. We move our stop loss too quick, right there. And the second mistake is that we get out too soon, because we forgot that we need to do a target, time-based target instead of location, right? Because we don't have any resistance right here, because it's all-time high, right? So where we gonna have a location to put our target? So we have to use time-based. In this case, gonna be 10 or 10:30. We get out, and that's what we are have the setup right here. Yep. And also we look right here, we see that this is also a real breakout. That gives you a very strong signal, right? Very strong signal. When you have a huge displacement, break out the resisting level or breakout level, then you have a doji close above that. That will be the huge signal to go in and let it run into 10 and 10:30 in this case, because it's all-time high, so we don't know what is the resistance level up there. Or we can use the measure move right here in this case. So that's how we define our target. Okay, here's the idea right here. So that right there, we refine our setup right there. We use the low time frame entry is the high time frame, but they are close, so that gives us a confluence right there. So basically, it's gonna be a 4 breakdown. Understand? Because we are on a down move, right? But we see the signal is bullish, so this is just a pullback right there. You see distribution, and then consolidation right there, and then this is manipulation right here, which is a pullback right there. And as soon as we identify the breakout level, then we know, or breakdown level in this case, so it can be a breakdown level, and it could be a 4 breakdown. Exactly 4 breakdown level right there. So we put a buy stop right there at 5:15.69, and we reach only 32 cents right there, and we have a huge move up. It's a major move, and we don't know, right? Because we don't know what the upside. It's a little bit tricky in this case, because we don't have it all-time high. It keep make all-time high, right? So we don't have any level up there in order to set our targets. Then the smart thing for us to do is do time-based targets, which is around 10:30-ish, or 10 or 10:30 in this case, which is the close of the Q4 right there. That's exactly what happened. Beautiful. Right here, you see, if we get out at 10 or 10-ish, the best. Or if we late, we can get out at 10:30. We get out, my friend. Otherwise, it's sell up right there. That's beautiful. Beautiful setup for it right there. So we learned from today, we make two mistakes. The first mistake that we move the stop loss too close, too soon, we have to re-entry. And the second mistake we make is we get out too soon. We get out too soon because we don't know where the target is gonna be, because there's no resistance level up there because all-time high. So that leads us to the lesson we learned, that we have to use time base. We have to use time base, in this case around 10-ish or 10:30, which is exit at this candle right there. So we entry right here and we get stop right here, and that also we get re-entry at that candle. We come down with stop loss. We move stop loss too soon. If we get stop loss here, we're still in the trade, so we don't have to re-entry. That's the first mistake. The second mistake, that the target we get out too soon. We get out at 14. Can you believe that? We get out at this level. Yeah, 12, 14. We get out at this level. We should let it run until 10 or 10:30, right there. So we get out at 14. Yeah, right there. So we should let it run 1, 2, 3, 4, about 20 minutes more. Let's see how much more we get. So we get 2 hours for ourselves right there. Well, we get another 89 cents. That's huge. See that? So basically, just right here, we go in and we reach 33 cents for that, and we let it run until 10 or 10:30. Let's go with 10:30 or 10 for that matter. We get our 10. So we have a risk reward ratio right here. But by the way, in this way we do time base, so we don't know which. But now in the hand side we just try to measure it. But sometimes in the real time it's absolutely impossible to measure them, right? Because we don't know what the upside level, which is due time base. But now we have a privilege of the hand side, so we can measure them. So basically 34 cents, and we get $2.40. So like grow up to 40 and to so about 1-to-6 ratio, 1-to-6 ratio right there. Alright, that's enough for our trade. We just take one trade and we have other thing to do, so we just don't. We almost take a short trade right here, but we miss it. Let's look at the short trade. So where is the short trade? Okay, we don't want to check any screenshot for the short trade, so let's check screenshot right now. Okay, the short trade right here, we see that we mark this level. This is a breakout level, okay, and then this is another breakout level. So we see that. I think we do check the screenshot of that. I don't know, where is that now? Okay, right here. Beautiful. Alright, we take the screenshot right there. So basically we mark this is breakout our level at right there at 515.80, and then as soon as we see this 2 candle break down that, and this candles grow up, they can open up, we can put a sell stop right there, and we reach only 32 cents. But look how much we gonna get, almost 1-to-10 risk-reward ratio right there. We target on the breakout level or high time frame, 1 hour time frame right there at this level. You see that? Very simple, We just read 34 cents. But very hard for us to execute the short trade because our account we don't have the privilege to short directly, and we have to use option, and the option there's no way for us to do a stop loss the way we do with the stock. So right there, it's beautiful right there at 10:30 exactly. See that at 10:30, man. That is the trade of the day right there. 10:30, wait for 10:30. Right here, you see that 10:30-ish, we short them. That's the idea. Pay on the time and then pay on the setup level. We identify level and go in. Boom, short them. And the target gonna be what? Yeah, the unfill, the gap. We should say V void gap up right there. Void gap up or void gap down, left unfill for touch day, which is exactly it's go to the unfill right there. If we look on the charts, right, 5 minutes, but we don't include, you see. So that's our target right there. That's the first target with it. Beautiful. Wow, what the week we have. A huge trade right there. This is the trade of the week right there. Beautiful. Well, if we miss the entry at 10:30, you still have at 10:55 right there. It's another entry for us right there because it's retest that level. You see that? You can put a limit order right there, or we can go right here at 11 exactly, put a sell stop right here at this level. So this level, it cannot break out that level. You see two level right there. It cannot break down that level. Then we can sort of the next level breakdown, for breakout. For breakout right there. This is for breakout level. Wow, it's huge double. That's really a study for us right there, my friend. Yeah, let's make sure we cover this. Beautiful. Yeah, what's the other trade we have? Yeah, this is the trade of the week we're talking about. We give it a name right there. For breakout short setup. Time entry at 10:30. It's ASAP right there. Exactly 10:30. If we miss, then we can go at 10:55 or at 11 right there. Man, that's really the trade of the week. Anyway, we go over our time. We need to wrap up right here. Before we wrap up, let's look at the 1 hour time frame. So we see two level right there. The breakout level, it break out. Another level here, break out, and now it go and look at that. So for the market go up, we don't want it to break out that level. So we see the first market structure shift right there. So it gives us a signal whether it's gonna be a temporary retracement or it's gonna be a real breakdown. Let's see next week. Anyway, we wrap up here. We're grateful for the opportunities. Appreciate your time and interest. We do what we love, then success is coming our way. Bye for now and have a great evening.